Welcome to Kharoo channel. We are solving the sums of depreciation chapter, and in this video we are going to solve practical problem 4, that is on page number 247 as per WDV method. Let's go through the question. Question 4. Radhika Masale Amravati purchased a plant on 1st January 2015 for 18,000. So plant 1 on 1st Jan 15 for 80,000. A new plant was purchased for rupees 60,000, installation expenses being rupees 10,000 on 1st April 16. This is plant 2, date is 1st April 16 and amount is 60,000 plus installation charges. As you know, as per accounting standard 10, we add all the expenses like installation expenses or other expenses, that is called as incidental expenses, to the cost of asset. This is as per accounting standard 10. So the cost of asset, the cost of second plant will be 70,000. And then on 1st Jan 17, a new plant was purchased for rupees 20,000 by disposing of the first plant at 60,000. So on 1st Jan 17, we have two transactions. One, new asset is purchased, plant 3 for 20,000, and this was purchased by disposing of first plant at 60,000. Sale of first plant on same date, 1st Jan 2017, the amount is 60,000. This is this asset. I am making the summary for explaining you the timeline of the transactions that are happening in the sum. You can directly start with working note. This is just for timeline reference. So with this, all transactions are noted. What they want: prepare plant account and depreciation account. Two ledgers we have to prepare, no journal entries, and plant account, depreciation account for 31st March 15, 31st March 16 and 31st March 17. So let's see what are the financial years. Here we have financial year 14-15, one transaction. 14-16, this is financial year 16-17. That means there is one more financial year in between, financial year 15-16, in which no purchase or sale transactions are there. In 16-17, we have three transactions. One purchase at the beginning of the year, then in between the year, and when we purchased plant 3, we sold plant 1. So 3 transactions, 2 purchase, 1 sale. Then assuming the rate of depreciation was 10% on diminishing balance method, we have to do this: prepare plant account and depreciation account. So the method is diminishing balance method, which is also called as written down value method, at the rate 10% per annum. Right? So with this summary, we can start with our working note. Working note 1, calculation of depreciation. Method is WDV at the rate 10%. We need particulars, and we have purchased 3 plants, plant 1, plant 2 and plant 3. So P1, P2, P3 and total depreciation. Purchase date and purchase amount. Plant 1 was purchased on 1st January 2015. Plant 2 was purchased on 1st April 16 and plant 3 was purchased on 1st Jan 2017. The amount is 80,000, 70,000 and 20,000. Correct? Depreciation for financial year 14-15. First machine was purchased in year 14-15, and second, third machine were not there. And first machine was purchased in between the years, so we'll have to do the working. 80,000 into 10% is 8,000, and 8,000 into, we had this machine from January, so Jan, Feb, March for 3 months. 3 divided by 12. 3 divided by 12 is 1/4, and 1/4 of 8,000 is 2,000. So the total depreciation in this year is 2,000. WDV as on 31/3/15 is 78,000. So with this, first year is done. In second year, you can see there are no purchase or sale transactions, right? So in this year, we'll just do the depreciation entry on first asset, as we have only plant 1 with us as of now. So less depreciation, financial year 15/16. The asset was used for whole year. So 78,000 into 10% is 7800. Total depreciation is 7800, and WDV as on 31/3/16 at the end of second year is 200 07 70,200. 70,200. So with the second year is done. Now in third year, we have purchased 2 plants, right? Plant 2 and plant 3, and we have sold plant 1. Less depreciation for financial year 16/17. Second plant was purchased on 1st April 16, and it was used for whole year, as it was purchased on first day of the year. So depreciation calculation is easy. 70,000 into 10%, that is 7,000. Then third plant, we have purchased it on 1st January 2017. Now this is in between the year. We had this asset with us from January. So Jan, Feb, March. We have used it for only 3 months. So the working will be for 3 months. 20,000 into 10% is 2,000 into 3 divided by 12. Correct? This is plant 3. And plant 1 was sold on 1st Jan 2017. So it was in the business up to December. So April, May, June, July, August, September, October, November, December, that is 9 months. So the working will be 70,200 into 10%, that is 10 less, 7020 into 9 divided by 12. Let's use the calci. 7020 into 9 divided by 12 is 5265. 5265 for plant 1, and 5265 is reduced from 70,200, that will give us 64,935. 64,935. This is first asset. Then second asset, 70,000 minus 7,000 is 63,000, and 20,000 minus, we have to do this, 2,000 divided by 4,000 into 3 divided by 12, or directly divided by 4, that is 500. So 20,000 minus 500 is 19,500. And we are going to sell off this asset, right? So in WDV, we will take just this and this value. The total is 63,000 plus 19,500. Total is 82,500. Depreciation amount, we will calculate, we will do the total of all the 3 assets. 5265 plus 7,000 plus 500. As this entire amount will go in profit and loss account. So we need this total. And other WDV total 78,000, and this is 70,200. And this is WDV as on 31/3/17. So our depreciation calculation is done, and we have got the WDV as on date of sale. This is plant 1 sold on 1st Jan 2017. So now we can do working note 2 for calculating what was the profit or loss on selling this asset. Working note 2, profit or loss from sale of asset, and that was plant 1, P1, right? And for calculating profit, we will need the sale amount. We have sale amount here. It was sold for 60,000. 60,000. and from that we will reduce WDV of this asset which was sold as on date of sale. And the WDV was 64,935. 64,935. So the book value is 64,935 and we were not able to recover that amount from the sale. We have sold it for less amount, so we have got a loss of 4,935. Loss on sale of P1. So with this our working note 2 is also done. Both our workings are ready and now we can open our ledger accounts. What we need? Plant account and depreciation account. In the books of Radhika Masale Amravati, we want to open plant account, and on next page depreciation account. So let's start the posting. In first year, plant 1 was purchased on 1st Jan for 80,000 and we have depreciation entry at the year end of 2,000. So 2 entries. Let's do the posting. On 1/1/15, plant account is debited to bank account. The amount is 80,000. We paid through bank. And at the year end, the value of plant reduces, so we credit. We credit what goes out as per traditional method, and we credit when the value of the asset reduces as per modern approach. So we will credit due to depreciation, the value of plant is reducing. So we will credit plant account and depreciation is expense. So we will debit depreciation account. So the entry is depreciation account debit to plant account at the year end 31/3/15. By depreciation amount is 2,000. Okay, so all the entries of first year is done. Now we can close the books. 80,000, 80,000. The balancing amount is 80 minus 2 is 78,000. By balance closed down. And we will carry forward this amount on next day, 1st April 15, to balance brought down 78,000. So plant account posting is done. Now we need to do the posting in depreciation account. So depreciation account we will debit at the year end 31/3/15 to plant account. The amount is 2,000. So no other depreciation entries are there. So we can close the depreciation account. 2,000, 2,000. The balance is transferred to profit and loss account at the year end by P&L account. As you know, we transfer all the balances of nominal account. Depreciation is a nominal account to profit and loss account at the year end to determine what is the profit or loss the business has made. So with this, first year posting is done. Now let's see second year. In second year, no asset was purchased or sold. So there is only one depreciation entry at the year end. So let's pass the entry 31/3/16 by depreciation account. Amount is 7,800. We can close the books. 78,000, 78,000. 78,000 minus 7,800, we have this value here 70,200. 70,200. 70,200 by balance closed down. Next day we will carry this amount forward on 1st April 16 to balance brought down 70,200. Plant posting is done. Let's do the depreciation posting. On 31/3/16 we have 7,800 to plant account 7,800, and as usual at the year end we close the books and transfer the balance of depreciation account to profit and loss account at the year end by P&L account 7,800. With this, second year entries are done. In third year, we have purchased plant 2 and plant 3. Plant 2 was purchased at the beginning of the year. So the depreciation amount is calculated on full year, and plant 3 was purchased in between the year. The amount is 70,000 and 20,000. So we will pass these purchase entries first. We have paid through bank, we will assume that. Generally we don't pay big amounts in cash. So first purchase on 1st April 16 to bank, new asset is coming in for 70,000. And then third machinery we purchased it on 1st January 17 and paid through bank to bank account 20,000. Purchase entries are done. Now we have one sale entry. We have sold plant 1. We have sold it on 1st Jan 2017. So on this date we will first pass depreciation entry, depreciation on the asset that we have sold. 1st Jan 2017 by depreciation account, the amount is 5265. Then we will pass the sale entry. What will be the sale entry? Since we have sold, we have received the amount of 60,000. We will assume that we have received this in bank. So bank account will be debited, debit the receiver. The asset of 64,935, plant 1 is going out of business. So we credit what goes out, plant account will be credited, and we have loss, we debit the expenses and losses. So we have two debits to credit plant. We have to credit plant account with 64,935, and for that we have two amounts, 60,000 and 4,935. So how we will do the posting? On 1st Jan 17 by bank, we have received this amount is 60,000, and by loss on sale of asset of plant, the amount is 4,935. So with this 64,935 asset value is going out of business. So the sale entry is done. Now what else is pending? In third year we have passed entry of depreciation of first asset, that is 5265, but we also have plant 2 and plant 3's depreciation, that is 7,000 plus 500, 7,500 entries pending of depreciation. So that entry we will pass on year end. So on 31st March 2017 by depreciation 7,500. For your reference you can write plant 2 plus plant 3, and this machinery was plant 1 which was sold. This is for your reference. In exam you need not write, that is your option. So with this plant account posting is done. Now we need to do the posting in depreciation account. In third year we have passed two separate entries of depreciation. First is as on date of sale of first asset, plant 1, and second is plant 2 and plant 3's total. So two posting will be there. So depreciation account will be debited twice, on 1st Jan 17 to plant account. The value of plant is reducing, so crediting plant, the amount is 5265, and again at the year end 31/3/17 to plant 7,500. So all the entries are done. Let's close the depreciation account also. 5265 plus 7,500, 5265 plus 7,500 is 12,765, 12,765, and this total amount we will transfer to profit and loss account at the year end, 31/3/17 by P&L account, and this amount you can see matches with our working 12,765. So depreciation account is closed. Now let's close the plant account. 7,200 plus 70,000 plus 20,000, 1,60,200, 1,60,200. 1,60,200 and minus 5265 minus 60,000 minus 4935 minus 7500, that is 82,500. 31,370 by balance goes down, and this amount we will carry forward in next year on 1st April 17 to balance brought down. So what have we done in this sum? We started with working note 1, we did calculation of depreciation. From this working we got the WDV as on date of sale for plant 1, and with this we did a second working, that is profit or loss from the sale of plant 1. We got loss of 4,935. With this working note 1 and working note 2, we opened plant account and depreciation account, and we did the posting for 3 years, financial year 14-15, 15-16 and 16-17. Similarly for depreciation account for 3 years. So this is your practical problem 4 as per WDV method from your textbook exercise. That's it for the video. If you find this video useful, please like the video, share it with your friends and subscribe for the future notifications.